Welcome, ladies and gentlemen. This video is going to be short and sweet. Well, I'm going to try and make it short and sweet, but that's another story. But we're going to be focusing on a specific metric that's come into play that has hit an extreme. Now, this extreme is based off the top leveraged traders who are coming into Bitcoin, shorting it or going long, and what that actually means for Bitcoin's price in the near future. So if you are new, welcome to Traders Reality. My name is Tino. I'm going to break it all down for you. Try and keep the video short and sweet for you because it is Labor Day. So I want you guys to just go and enjoy yourselves with your family. So let's break it all down so you can understand exactly where I'm coming from. So first things first, let's just break down the logic of what we're trying to explain here. Open interest. Well, it just basically means how much money are people borrowing. That's to simplify it for you. When you go to an exchange and say, yo, I want to go long on Bitcoin, 100x leverage, that 100x that you are using is the open interest. That's where you're borrowing from the exchange, and then you'll be going crazy about the funding rate and what have you, and the commissions that you're being charged. Well, it's because you're borrowing money from an exchange. That exchange gets that money straight from the market maker, who is the liquidity provider. Now, in front of you, you can see that we've had various bouts of open interest coming into play. So in other words, the darker the open interest bars are, the less open interest there is. The brighter the open interest bars, the more open interest there is. So you can see here that there was a lot of open interest across cryptocurrency overall. In relative to Bitcoin's price action, we can safely say that at that time was when the Jackson Hole Symposium came into play and a lot of open interest was opened. So lots of leverage came in, and then look what happened. Bitcoin's price drops and all those guys in open interest ended up getting their asses handed to them. Now we're going into a very interesting situation because we don't really have that much open interest coming into play here. However, there is a metric that is coming into action that can actually give us a clue as to what could happen very soon. Let me explain. In front of you is this chart right here. This chart is effectively not working. Let's start again. So the chart's working now. In front of you is the chart that represents the top average traders leveraged delta. Now, this chart gives us a bit of a breakdown on what we can expect from Bitcoin's price. But more importantly, the one thing you need to be understanding is the commitment of people putting money to work. That's what makes price move. In front of you, you can see these bars, okay? These bars represent when the leverage is at a high level, which could give us the insight into believing that maybe Bitcoin's price is going to go up or maybe come down. And you can see here, they've opened lots of leverage right there, the top traders, and then end up seeing price make a move to the upside. Happy days. You then go over to here and you can see lots of accumulation happening. They then see a little bit of a pullback, but then price ends up making its nice claim to the upside again, hitting that 124K, and there was your all-time high. So lots of leverage traders managed to exploit that. But let me just show you the metric that is actually grabbing my attention. Bottom of the chart, you can see this red line, which represents the short sellers leverage, or the top short sellers leverage coming into play. You can see that there is a clear deviation between short sellers and, of course, guys who are going long. Now, this is where it gets interesting. If you go back in this chart, this is on the 4-hour time frame, we haven't hit an extreme of short sellers for a very long time. Here we are in today's date, well, in essence, the 28th of August, all right? Just a couple of days ago or so. Go all the way over to the last time we saw it hit a massive extreme, and that would be on the 20th of January, 2024. So what happened there? Well, that massive extreme of shorts that opened at the bottom here ended up being Bitcoin making the reversal from 39,000 all the way up towards the top side of around 74,000, which was that last all-time high that we saw where Bitcoin had corrected for the longest period of time at its all-time high before it then continued to make the move higher. So where am I going with this? Well, you can see bright as day between the two extremes. Even if I were to get a line right here and mark off this point and go all the way across, you can see we're not even at that point yet, but it's been a long time since we've actually seen this sort of leverage coming into play by short sellers. So the last time that happened at such an extreme, price pulled back ever so slightly and then rocket to the upside, or to the moon for the better word. Is that logic coming into play right now? It goes back to the idea of open interest. You've got lots of traders that are building positions or going short. What's going on? They're borrowing money. And who they're borrowing it from? Mr. Market Maker. Your short is his long, and your long is his short. So if you're all going short, he's going long. That means there is a desire at some point to offload those longs. Let me explain. In front of you is the liquidations chart. In front, you can see that there is a bag of short liquidations at 110,000. Now you can see various figures, 204 million, 238, 236, 243, 240. Okay, so it's safe to say that we got roughly around $1 billion worth of short liquidations around the 110,000 point. Taking it back to this chart over here, would the logic, and would you be in agreement with me that now that we've hit a massive extreme on the short side of top traders running shorts on Bitcoin, is there a possibility or an assumption to make a claim that this is effectively the point that Bitcoin could make a reversal from? Because everyone is now committed to the shorts. You've got the liquidity up there. So the logic does say that we could be getting primed for Bitcoin's price to make a recovery to the upside to clear out the 110. Now, you might look at this and think, hold on a second, does this mean that this amount of short liquidations is going to get hit and that means Bitcoin can continue to climb higher and higher and higher? Well, by the principle of this chart right here, what we would need to see is leveraged traders coming in showing commitment. But what you will find with this chart is for every extreme on the short side, shortly after, you're going to see guys coming in with longs leverage. That's the key thing. So let me just show you right here. You've seen here that you've got, let's give you an example, a short one. Okay, all right, let's go with this one here. You see this area here? This looks like there's lots of short liquidations or short long leverage traders coming into play on this one right here. You see that? That's where a lot of short sellers have come into play, borrowing leverage, right? Borrowing money. Price consolidates sideways, makes a little bit of a run to the downside. All those short sellers are like, yeah, baby. Then all of a sudden, Bitcoin's price starts to go up. It then goes up and shakes out those short sellers. That's when the leverage comes into play. That's when the guys come in, buy the dip, and they see Bitcoin pumping. And then Bitcoin makes the climb to the upside and completely wipes out all those short liquidations and their margins. When we say the margins, you've got to look at this chart over here. You can see Bitcoin's price right now, pretty evident. And then you go to the right and you can see the various leveraged points in the chart. So the brighter the color, the less leverage or the less margin is being used by the retail trader. The darker the color, the more margin is being put up by the retail trader or the hedge fund, who knows? But this is where the beef of the money is, where the larger margins with the less leverage is where the liquidity goes. But whilst the market maker is navigating to those points, he's clearing out all of these short traders here. And the leverage that they're using is lots of leverage with less margin, but there are more participants using more leverage than margin. So that's where the market does these stop runs to the upside to wipe those traders out. And then what that then does is price then comes back down again, makes the guys who are in already high margins add to those margins to effectively get more exposure in their position because they believe that price is going down. And then, of course, price then ends up making the reversal and completely wipes out those short liquidations. Now, is this just a simple metric that's going to make you millions and millions of dollars? No, it's not. There are a number of other things that you've got to take into consideration. But when we look at it, you can see that we have hit an extreme where short sellers or top short sellers are coming in right now. The market's already made a move to the downside. So the logic could suggest that Bitcoin is being primed for a reversal. Remember this chart that I shared to you all earlier on in the live stream? Well, we are at a very big open interest point, which is where we would naturally assume that the traders who were long previously in this range over here technically should start coming into play at this point, which then means that at some instance, we are going to see some of these green lines, which would suggest that top leveraged long traders are stepping in, getting ready to exploit Bitcoin's move to the upside. So what does it all mean, Tino? Should I go long right now? Well, ladies and gentlemen, it would be reckless for me to say to you, go long and buy Bitcoin, but you're improving the odds of something working in your favor if you are, as they say, he who dares wins, or fortune favors the bold. All right, let's start again. Look, quite frankly, ladies and gentlemen, we're at a very significant point with Bitcoin, okay? Now, if you're a spot trader, then it's clear as day that you're getting Bitcoin on a discount. Now, remember what we said. The next 14 trading sessions are going to dictate if this is going to keep the bull run going in crypto or it's not. Remember, the Federal Reserve is going to get a flurry of data coming out this week. ADP non-farm, JOLTS job openings report, ISM manufacturing, which is linked to the M2 money supply. Remember that. The ISM manufacturing index is linked to the M2 money supply. And the M2 money supply is the potential purchasing power around the US economy, or based on the circulation of money, the potential for purchasing power. If the ISM comes out tomorrow and shows a contraction, then you can assume that the potential of M2 money supply is starting to contract and come down. So that means not many people are putting money to work. But can Bitcoin buck the trend of that? I hope that makes sense to you all, ladies and gentlemen. And remember, be bold. And I will be speaking to you all tomorrow. Have yourselves a wonderful Labor Day. And that's it. Just like and subscribe. It's free to do. Peace.